Good evening, everybody. It's the Daily Trader. It is June 10th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I'm not a financial advisor, so please do your own research and make your own decisions. So Tesla decided and it decided to break the upward support that we had here. So we closed at 696.69, down $22.43 for 3.12% post market. This is up, but I'm a little bit surprised about that. So let's look at what we have here. So yesterday we thought we were going to get back outside of this downward channel. This really boring downward channel. We tried to get out of it, but we crashed. We came back down inside of it. And as I said, the stock was going to have to make a decision. Do we break this resistance or do we break the support right here? And the stock decided to break the support. So we broke the support. We are still just a little bit above 695.46 as a support. We came lower and came back up. But yeah, so basically we are right there on that support for this Friday. So we are going to see next week if we are bouncing on that support. That's a possibility. We could bounce, or we could just keep continuing down to 619. And if the stock is even weaker, then we could go and reach this downward support. We could be reaching as low as 4 something, at 470 something. Will it happen? I don't know, but let's talk about 619 first, and then we can see what can happen from there. Let's go on the 1 hour chart. Let me go back to AutoFit. So 1 hour chart. Yes, the first hour of the day was the hard one. We opened this low, went high up, and then came back down, second hour down. And look at how closely we are following this downward support, bouncing on this and bouncing up towards 795. This is a double support that we had. 795 could not break outside of it. And then on the last hour, we came down from it. Look at stochastic here. Stochastic is extremely low. So we know what this means is that we should not believe this move up right here. So it should be going back up. Let's go back to the stochastic. Stochastic is getting lower a little bit now. So at 44, MACD still in the same position. RSI getting a little bit below 50, and the MI is getting a little bit worse. Aren't we glad that we love our stochastic over 60? I've been telling you this, watch stochastic over 60, watch stochastic over 60 when there's a break in resistance, If we don't get stochastic over 60, don't believe the break. It's been so true right here on the daily chart. Okay, let's go look at the VIX. Yeah, this is what has caused what we are seeing right now. The VIX is climbing for the past 2 days, and we have even broken this downward resistance. So it means that the VIX is not going down anymore. It's not going down anymore. So it could be going sideways or going up, but it's not going down, at least at the rate it was. So maybe this is something that we need to think about for the next week. Let's look at Dow Jones. Dow Jones plunged quite hard yesterday, and also today plunged, and we are almost back to 31,222. Stochastic has been lost, and we had it here. We had stochastic here. We had the power, but the stock just did not go up. As I say, stochastic is less important than breaking resistance. But when you break a resistance without stochastic, it tends not to go far. And when you have stochastic and it does not break resistance, then you don't have to think about it. If it does not break resistance, what good is it? Because this is the basis of technical analysis. We need to break resistance or at least bounce on support in order to buy something. SPX, the same thing, going super fast towards 38.78. And the same thing for Nasdaq Composite. So pretty bad all around. And in terms of the news, this is the news that we have here. U.S. stocks sank Friday after annual inflation for May reached a fresh four-decade high, piling pressure on U.S. Federal Reserve to stick with its aggressive monetary tightening beyond June. The consumer price index soared 8.6% year over year in May, the most since December 1981. Basically, this is not looking good at all. What happened today is that we had a piece of news that had a direct impact on the stock market. So this can happen. I think this happened today. But then what is going to happen in the following days, in the following weeks, and maybe in the following month? We are going to distance ourselves in terms of calendar dates from this news here. And then it's going to be interesting to see how the market processes this news and what kind of justification people are going to come up with and everything. And this is why technical analysis is really important, because we are looking at the end results of all the thinking that people have based on news that come out. If you want to understand how people think, you just have to look at the stock price and then you will get your answer there. So thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. You can click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk on Monday. Unless you are a member with the specific tier, then we are going to talk on Sunday and look at Tesla, Palantir, the indices from a weekly technical analysis perspective compared to the daily that we do every single day. So this will help us understand a little bit more what we can expect for the next week. So have a great weekend, and I'm going to tell you à la prochaine.